I know we have some experienced traders, some people who have been trading for a while, and then we have some people who don't have trading experience or little or no trading experience. Today's training is it's mostly based on trade psychology and how you can make yourself or train yourself to become a consistent trader as far as the forex market is concerned. The forex market is an interesting place to be. It's a place where you could potentially make a lot of money, but it requires you to develop a certain type of skill set or mindset. And then there are a lot of people who don't make money. And so this video is to address why that happens and how you can ensure that you do your best to make sure you're on the side of a few people who actually do consistently make profits on the market. So when I say by the time being a successful trader, it doesn't mean you win all your trades. It doesn't even mean that you have a net profit every week or every month. You might have one down month in a year or two down months in a year. But overall, you are a successful trader if you make more money, way more money than you lose. Okay, so it's important to put out a disclaimer when it comes to the financial market. There are risks associated with the financial market, and so it's important that you know this so that you trade with money you can more or less afford to lose. So I'll be your host. My name is Nana Obin Alexander. I'm a forex trader, and I'm also a trainer with several years' experience in the market, and I'm also a very enthusiastic crypto analyst. So what we'll be covering today is going to be interesting. So we'll start off with why do many traders lose? We're going to try and demystify the fact as to why traders lose in general, why most traders lose, and then we'll also look at how we can come out from that hideous circle and how you can give yourself an edge in the market. And then we'll wrap up with how you can stop disruptive trading behavior that seems to be holding you back. So, I like this quote from Abraham Lincoln, which says that if I have 6 hours to chop down a tree, he said he will spend the first 4 hours sharpening the axe. This is the approach you want to take to life, not just trading. When it comes to life, this is the approach you want to take in life. The It's not just the desire to win that is important. It's actually the desire to prepare to win. That is actually what makes you a winner. It's not just the desire that you want. Everybody has a desire to win, but it's the desire to prepare to win. That is the difference between people who actually succeed and people who just wish they succeed. So here at GC Markets, we want our clients to be successful, and we want to make sure that we can do that for you. So before I begin up with the nitty gritty, maybe what I should have done is I should explain a little bit about forex, and I should have even included this slide there. But forex trading involves it's a system where for this is actually for those who have no idea of trading. I'll probably drop a link in the chat box so that you can use and visit previous resources, videos or training videos, and you can learn more about trading. So I'll just briefly just talk about forex and move on to the subject of today. But stick around, you it will be very important to you. As a matter of fact, if you've not traded forex before, it's probably best that you watch this first and then watch that because this will kind of more or less shape your brain so that you don't enter or start forming negative habits that is bad for your trading. So forex trading actually involves is actually the exchange of currencies, the trading of currencies, so that we can make profits by the differences in exchange rate. So, for example, if you got the dollar, let's say you bought $1,000 when the dollar was cheaper, let's say at 400 naira per dollar, and you hold on to that money and you sell back now, you've made a profit when the dollar is, let's say, like 465. You make a profit, you already made a profit because you bought the dollar at a certain time and then sold it back to get your naira at a later time and made a profit on the difference. So, but this is basically just in the simplest way I can explain what we do in the forex market. We trade the price differences in exchange rates in a bid to make money because the exchange rate maybe has moved from one to another. And then we can make money in either case whether we are buying or selling. And we don't need the physical currency. Everything is done digitally and online. And it is actually the forex market is the biggest market in the world. Every day, $6.6 trillion is made. You can make millions of dollars on the forex market. We can make millions of dollars on the forex market. Forex market is an exciting place, and and a lot of money can be potentially made. But a lot of money can be lost if you don't know what you're doing. That is why you need GC market. So now let's go to the business of today. Why traders? Why many? I say why traders never make money. What I mean is a lot of people trade the forex market. In my opinion, they just gamble. So they make they make a lot of money today, and then maybe they make a lot of money for this month, and then the next 6 months they are just giving it back and losing, and even losing more besides, and they keep funding their account. They make money from the forex market, they withdraw some, they blow the account, they fund again, they blow the account. They make some money, but in general, they don't make money. They just pay the market. In my opinion, the only reason I want to fund my account is if I just maybe want to increase my capital, because I should be making profit from my trades to even take care of my life, right? So why traders lose? If you've ever traded the forex market, there's a common concept that the ideology is that the emotions of greed and fear are the main reason why many traders lose. Now, I do actually agree to this, but here's the thing, it doesn't really explain the whole story. There's a much more underlying factor as to why traders lose. There's much more reason to that. And that's what I'll try to demystify here. So if you are an experienced trader, this is actually good for you. If you're not really consistently making money, this is very important to you. Now, it's something I like to call the double P quotient. I got this from a very top trader that I used to follow. It's actually the double P quotient. This is what I call it, and it stands for the both P stands for pain and pleasure. Now, you'd I might talk about some things that you'll be wondering how do they relate to the forex market. Just stick with me. Now, as humans, everything we do is based on pain and pleasure. Everything we do in life is based on pain and pleasure. Now, because we are humans, we carry this same emotion to the market. Now, what do I mean by pain and pleasure? Well, if if you're giving something that you like, your brain releases dopamine, it releases this feel good hormones, and then you start feeling excited. You're feeling good, like the whole world is going in your favor. And this is why it happens the same thing in trades. Life is good, and then if you're feeling stressed or pain, your brain also releases the endorphins, which is, it makes you feel bad. And when you're feeling pain, you just want to stop it, right? When you're feeling pain and things are going south, your system just wants to stop the stress. That is why if something hot touch your skin, you immediately react. Kind of remove your hand. Your brain tells you instantly that this particular feeling I don't like, so stop that feeling. It's also the same reason why when things are going when things are going in your favor, you want it to continue on and on and on forever. Well, why this is how we function as humans, this doesn't necessarily this doesn't necessarily work in your favor when it comes to the market. Now, as a trader, especially for those traders that we have on the platform, you know this feeling, right? So you take a trade, and the trade is gone in your favor, and you see the market shooting. Now you see a very long bullish candle. Let's say you're buying, and the market takes off, right? You feel good, you relax, like, I analyze this pair very well, I know what I'm doing. You sit back, you just want it to go on and on and on. And let's say you have a stop loss, let's say you have your take profit at maybe 50 pips, and it's already at 40 pips, and you're like, wow, no, this thing will still go further up. Let me remove the stop loss and move it further. That is your brain playing with you. Like that dopamine released in your brain just wants to continue feeling good. And so your brain, your body system does everything to try to keep the pleasure going. Right? Sorry. So Now you push your take profits higher, and then you what happens? Let's say the market, even if the market goes and gives you your trade, gives you the profits, you feel like, wow, I know what I'm doing. But more or less, what you find most times is the market will reverse against you, right? And it's the endorphins or the stress or the pain hormones is when you take a trade, and then immediately you take the trade, and what you start seeing red, and the market start going down, and you start feeling agitated, you start feeling stressed. And so you like, did I enter too early? Let me close this trade before the thing goes and gives me so amount of loss, and you feel stressed. Now, this actually, even though it's a human tendency, it's the reason why, if not for these two hormones, if fire is on your skin, you will not feel the pain until and then it will burn you. But because of the endorphins, you feel pain and you do what you need to do to, kind of stop the pain. And then if something is good, you keep it going. But when it comes to the financial markets, when it comes to business in general, you don't want to allow this natural tendency work against you. And what the heck am I talking about? What does this have to do with trading? Just like I just explained now, whenever we see our positions in profit, we feel good, we want it to keep going. And then when we see it in loss, the agitation is just too much that we want it to stop. Now, we are always going to be humans. But the market doesn't need us to be humans, right? It doesn't need us to put all our human emotions. And this is the reason why the majority of traders, a lot of traders actually do not consistently make money. This is because they keep playing the market in terms of emotion. Like they keep allowing their natural human emotion to mess up with their trades. Now, how do we fix that, right? How do we fix that? Well, this is where we now look to the second part, which is how to become a pro trader. I think everybody will agree with me, especially those traders, is you know this, that in order to become a successful trader, you need to be able to take unemotional, decisive action at the right time over and over again. Well, this is how you make money. You need to be able to pull the trigger at the right time without flinching. And you need to be able to do this over and over again. But you know this feeling where you're looking to buy, like you're like, okay, I'm going to buy, or maybe I'm going to sell. Okay, I'm going to sell when it gets, I'll put a pending order. And, when it gets to this point, I'll take my trade. And then you start seeing the markets going, it looks as if it's already going to the way you wanted it to go without triggering your entry. And so you're like, okay, no, I'll jump in here and I'll take it. And you jump in, and you try to take the money from where it is, and then you find the market reverse against you. So you keep playing the market with emotion. And when you do this, you feel this pain pleasure. You keep dancing around the edge of pain pleasure, and this kind of works against you. Is the reason why you have a trade. You have a target. Let's say you're targeting point A, and the market is still on its way to point A, and then you see the market retracing, like it's kind of bouncing back. You feel like, man, I have to close this trade. Let me close this trade. This market, I've seen $10 profits, and now I'm seeing $2 or I'm seeing $5. Let me close this before the thing goes to zero. And then you close it, then the market rallies and goes to your $100 target. You know, because of that's the reason you ended the trade prematurely. One of the reasons is because the pain of losing the money that you probably made you collect less. And it's also the same reason why you take a trade and the trade is going against you. And you're looking, okay, do I close this thing and take a $30 loss? Or do I close this and take a $100 loss? No. I'll wait. Let the market come back so that I don't feel this pain, so that I don't feel the full pain of losing the money. And so you hold on and you hold on and you hold on. This will go up, it will go up, it will go up. And what you see is maybe you see a margin call and you've blown your account. This is pain and pleasure working against you. So, in order to be a successful trader, you need to be able to take unemotional, decisive action at the right time, and you need to be able to do this over and over again. Need to have a strategy, which will come to. So now you need to understand this in order to be a pro trader. You have no control over the market. You don't have any control about the market. You cannot do anything about it. All you can do is flow with it. But what I see is a lot of traders trying to control the market, even praying on top of the market. No, my God, do not allow me lose. Your God does not care about that market. This is a different system. The market does not know you and does not care. So you have no control over the market. So don't try to control it. Naturally, as humans, you try to control everything. So, if you try to control your family, you try to control things, but when it comes to the forex markets, you have no control over it, except maybe your account. You maybe your forex account you funded, you have your trading with $6.6 trillion. And we know nobody does that. So this is why, since you have no control over the market, don't try to control it. Allow the market do what the market wants to do, and then all you have to do is flow with it. The best analogy I can think of is like surfers. So when you have, I know we don't do surfing in the beach here in Nigeria, but if you see those surfers who ride the waves, they don't go looking for the wave, right? The best surfers, they wait for the wave, the big wave to build, and then they just flow with it. You cannot go and force the river, the ocean to form a wave so that you ride. You wait for the ocean to do its thing, and then you flow with it. That is the same way you should approach the forex market. You have no control over it, so don't try to control it. Flow with it. Now, you need to start trusting your education. This is very important. To become a forex trader, you need to learn, right? And then for those of our traders who've been trading for a while, you know a lot of things. Like you've learned MACD, moving average crosses, you do Fibonacci, you do price action technique, you do support and resistance. You know a lot of things, right? And in hindsight, when you look back, you see that those things work. Even indicators, you use your indicator. Those things, they seem to have been working. But why is it that when it's time to trade, like when it's actually trading time, you never trust your education? So what you do is, let's say you have a plan where, okay, if the market forms a price action candlestick from a particular point, and then let's say the stochastics enters oversold or overbought, and let's say the moving average has crossed, I'll place this trigger. But what will happen is you will see let's say you see the market is at resistance, and then you see let's say a bullish candle or a bearish candle from a high side. And what happens is stochastic has not completed, all other parameters that you would normally use has not formed. And you're like, okay, 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 this thing is going to form, it's going to form. So I'm going to enter the trade and trigger my position. And so what happens then is you enter the position, and then the market does not complete the formation of all the things, and then moves against you and blowing your account, or maybe giving you a loss. And when you repeat this over and over again, you keep taking losses for trades you probably shouldn't have taken, or you should have waited for the parameters to be complete before you trigger. You know these things, but you don't do it. It's just that same pain and pleasure. You don't want to wait and see the market run off, without you, and you start feeling pains or feeling bad. So you jump in prematurely, and the market gives you the pain that you were trying to run away from. So this is the technique, or this is the reason why a lot of traders actually lose. And in order to give yourself an edge in the market, you really need to start trusting your education. Now, the next thing is, why you trust your education, you certainly do not want to trust your heart, right? Why you trust your education, you definitely don't want to trust your heart, because you can, when it comes to love and and intuition and other things, go with your heart. Even at that, if your heart might deceive you, but in most things, we tend to follow our hearts or our head. When it comes to forex trading, don't trust your heart. Trust the chart, trust your education, but never trust your heart, because your heart always tends to go against you, always tends to sabotage you in most cases. It makes you prematurely enter the market, it makes you prematurely exit the market, it makes you not to stick to your trading plan. You start feeling, I'm not traded today. There's nothing that fits your criteria or to trade, but because your heart keeps pushing you, you trigger trades that Well, you shouldn't have. And so in the end, you find yourself losing. And then when you keep that up, you find that yourself that you just probably make some money, but then you give it back. You make some money and then you give it back. And this is not the way to be a successful trader. In order to become a successful trader, you need to be able to take decisions, unemotional, decisive decisions at the right time. Now, another important thing that I want to talk about is the fact that you don't want to dwell too much on the past. This is not just in trading; it's actually in everything. You don't want to dwell too much on the past. So if you've taken trades, it doesn't matter if it's a winning trade or a losing trade. You don't want to, you don't want to now be stuck in the past. If you've made mistakes, learn from them and you move on. Don't dwell in it. You don't even want to dwell in the future either, like thinking of all the Lamborghinis you want to buy and all the Ferraris, and it causes you to, because you can't do anything about the future. You can only try and what we do is kind of estimate, take a calculated decision based on what might possibly happen, but we don't know what will happen. So instead of that, what you want to do is focus on the present, because that is the only place you can do something about. Focus on the present and then do something about it. Okay, so we're looking at how we can give ourselves an edge, how you can give yourself an edge in the market. You need to understand that you have no control over the market, and then you have to try not to control it, because you can't do that. You need to trust your education. What you've learned, it's one thing to, people want to know the new strategy. What do I do? How do I make consistent profits? Oh, Obina, how do you trade? Give me your secret. But the forex market is so dynamic that you have several types of traders, using several strategies, but they are only successful because they trade that strategy decisively, and the strategy is what works for them. So what may suit my style may not suit your style. Or you can the basics, the meat of forex trading. That is what we teach you here, and then you will develop your style. But when you do that, you need to trust your education. You need to trust your system and not your heart. And then you need to dwell in the present and not stick around in the past or in the future, because you can't do anything about the past and you can't do anything about the future. The only thing you can do something about is the present. So it all comes down to smart and effective planning. Now, how do you stop these destructive behaviors that hold traders back? A lot of traders struggle, and they struggle a lot. So I see people who get excited about making oh, I made $100 last month, or I made $100 last week. Well, why that is good news. It's not really exciting to me until I see that, okay, in the past you tell me that, okay, I'm rather happy when you tell me over the past 6 months, over the past 1 year, I've been consistent. I've been sticking to my trading plans, and I've been, doing well. That is the only way you grow. You grow by continuous improvement. I liked Toyota's motto, which is Kaizen, which actually stands for continuous improvement. This is the way you should treat yourself as a forex trader. Your whole idea should be about continuous improvement. Now, how do you stop destructive behaviors? Humans, we are creatures of habit. So it means we tend to do what we often repeat. So if you keep repeating bad habits, you will tend to do more of it. If you keep repeating things you don't like, it gets easier and easier for you to do more and more of it. So it means if you want to do something different, you need to form the habit over time of trying to do that same thing. And then what happens is you find yourself forming good habits that you would rather have. Now, just I've mentioned severally, trading emotions work against you when it comes to trading. And this is the reason why you see a lot of people, on demo accounts, they make money. On demo, there's no emotion, right? There's no emotion attached to demo. You can open the trade, you have $100,000 demo to trade with. So you open a trade, you place two standard lots, and you forget about it. You place a trade and you even forget it. Maybe next week you come back, you look at it. That trade is up $10,000. I'm a good trader, right? Or because you are not, there's no pain, there's no PP quotient. You're not feeling any pain or feeling any pressure about it. And that's why when you now move to live accounts, you place a trade and you see it in red, your heart flies. If you over leverage, you have $100 account and you're using like a zero point 0.1 lot size and it goes 10 pips against you, you're in soup. You're already scared. You have $10 and the market might even go further. Pain, pleasure, hormones kick in. So your trading, when it comes to trading, your emotions work against you. So you need to find a way to trade unemotionally. As humans, we are always going to have emotions, right? The only way you can trade the market unemotionally is by creating definite trading steps. So, for example, on although there's going to probably be a different video on journal on that, but you need to create a trade journal. Now, this will do a couple of things for you. One is which it will give you time before you between when you just those this rush, this instinctive place a trade without even analysis. I don't care what your analysis is, even if it's technical or fundamental. There's no analysis. You just see the market moving, and you feel like if you don't jump in now, right, you will lose. You will not. You probably not make money. So you want to make the money, so you jump in, and then you realize that you jumped in at a very high price, or you jumped in at a very low price, and the market start reversing or start doing something else. And then maybe when you now look at it, you'll be like, "Wow, I shouldn't have bought though," right? The reason you took that trade is because you did not plan for it. So in order to be able to take away the emotions, not necessarily take it out completely, but you will get there with time. And in order to take away the emotions, then you need to build a disciplined trading system, and it involves what I call rule-based trading. So the only way to fix this is to develop a rule-based trading system and follow this system religiously. This system will be different for everybody. So if you are an indicator trader, you figure out what works for you, then you create a system. Okay, if this indicator does like this, if MACD does this, if the moving average, whatever indicator you're using, and you maybe your sets of indicators you're using, stick to it and pre-plan your trade. So you don't just come into the market and you see something exciting and you jump on it, right? If I don't do analysis on a pair and I come and I see a good opportunity, no matter how I wouldn't take that trade, because it is what I do is I already have a pre-planned way I take trades. So if I don't pre-plan my trades, it doesn't matter whether I think it's probably right. That's my punishment for not pre-planning. So it will mean next time I have to do proper analysis so that I don't miss out on opportunities. This rule-based system will prevent you from having, when you start up at first, it will still not be easy, but when you keep at it, this would help you be better. So this also involves where you exit for stop loss, where you exit for take profit. If you're using indicators, you if the indicator negates your entry, there's no point sticking around, right? Close your trade, take your loss. Don't now start moving your stop loss that okay to come back, or do the worst of it trading without stop loss. You know the what I see people do this a lot, and I just smile. In my head, I'm like, okay, it's either they learn from it one way or the other, or they don't. But if you keep trading with so much risk and without even a kind of like no net, imagine somebody doing a stunt and there's no safety net. Yeah, you can be successful 10 times, but you just need to fail once to die, right? If you do the stunt, you pull it up 10 times. Whoa, this is good. Or she's good. But you just need to fail just once and it's over for you. The safety net would mean if you fail, you don't lose your life. You just fall on the net and try again. So when I see people trade with no stop loss, except even if you don't trade at that, I'm going to raise my hand and say, I'm sure there's some people who are profitable doing that system. Well, fine, but it is also based on a rule-based system. Like there are rules to it. Even though I would probably not trade like that, but I'm sure those who succeed trading like that, if there are any, have a system that works on it. And this system helps to keep your emotion at bay so that you trade based on these established principles. Next, win or lose, the only point you should consider or you should be happy about is Did I follow my rules? Now, let us sink in. Win or lose, the only point that should matter is, did I follow my rules? Now, this is a way to, what I call it is my cold stone, my cold stone killer face, right? So if I win a trade or I lose a trade, I don't express emotion. So I'm not happy, I'm not sad about winning or losing. The only thing that matters to me is when I look at it, did I follow my plan? So if I take a trade and let's say I'm using support resistance and let's say price action and maybe moving average, and that is my trading system, right? So I took a trade and then the trade went against me and hit my stop loss. I go back, analyze my loss. The question I ask myself is, if I see this trade again, will I take it? If my answer to that question is yes, then I won. Even though I lost the trade, I know that I did the right thing. And then, just as I said earlier on, successful traders are those who do the same, unemotional trading over and over again. Because I already know that I'm not going to win all of my trades. So I'm not trying to win all of my trades. I'm just trying to follow a system that is profitable on the long run. So winning or losing is not the point. The point that matters should be, did I follow my rules? Did I follow my trading system? If yes, then I won. Now, if consistently over time that system doesn't work, that is when you now go back and change the system. You know, um, if you have a system that works, that is profitable 60% of the time, well, that's a good system, right? But it also means that 40% of the time you'll be wrong. So if, and that 40% of the time can come, at any interval. So you can have lose, 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 lose before you have six wins. That will still account to 60%, right? You could also have lose, lose, win, win, lose, lose, win, 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 something like that. And that will also be 60%. Now, if you lose 1, 2, and you throw away the system and jump onto another system, you lose again. So you just keep jumping around and going nowhere, but just losing money in the market. And this is why a system is just the only way you can succeed as a trader. Now you need to keep a trade journal. As you get better, your trade journal will take on a different life, right? So at first, while you're struggling with all of this, you have to what I advise is document each trade that you take before you take it. This will mean that you have to analyze the market before the opportunity arises. And then when the trade, before you trigger, okay, this is what I'm looking at, like I'm looking at the market to do such and such and such, or the market has done such and such and such. And so for this, I'm looking to enter at this point. However, if the market moves above here or below here, then I should exit for loss. It has negated my entry, and this is my target for profit, and here is why. Now, this is hard in terms of like it is hard work, meaning instead of just taking a trade, it will mean you have to document, and we don't really like documenting. But it's good for you because the act of documenting would remove that instinctive buying or selling, which usually cause you to lose. So keeping a trade journal is the way to go. Now, as you get better, you get to the point where you don't necessarily need to keep a trade journal as detailed. You can just briefly highlight the points, and then maybe on your weekly summary journal, you can explain, look at the major pairs you're looking at. Then in your daily trading journals, you can briefly highlight the point. But at first, you want to make it as detailed as possible so that you come back to it. So if the trade goes against you, now the reason you're keeping this journal is not just for the sake of keeping it. If the trade goes against you, you go back and look at the trade and see if the trade was sound in the first place, right? If it's sound and it went against you, you clap for yourself, like you did what is right, and you stick to your system. You know that over time you would profit from the market, and then you also do not want to over leverage on a position. Now, you have seen one of the things I see many times. You see somebody maybe funds $100 account, takes it up to like 150, and you're feeling good, right? You're feeling excited. You're feeling like, oh, I know what I'm doing. I'm going to soon buy a car. And then next thing you see a position, "Ah, I've seen this before. It did like this. It did like this. It has formed this. It has formed that. Moving average has done this. Stochastic is saying overbought, and then you're like, ah, I'm going to put one standard lot, or maybe I'm going to use two micro lots on a $150 account. Now, if you use like two micro or two mini lots, not even micro lots, two mini lots, which is one pip, each pip is worth $2, right? If the trade goes 10 pips against you, that's $20. But before you entered, you were looking, even if this trade just goes 50 pips, that's $100. Wow, I've hammered. But you're over leveraged because just a few pips away, you're gone. Like if the market goes, even if you're correct on your analysis, but we know that the market doesn't just go in straight line. So the market might first, reverse. That's if you are 20 pips in a loss, like your position is 20 pips in a loss, and you're using a 0.01, the feeling of pain is different from if you're in a 20 pips loss. So when you're using a zero point 0.2, and one, your current loss will be showing something like, let's say, $2, right? While the other one will be showing something like $20. And this is just, and your account is, let's say, $100. The feeling of pain would just drain you. And this is destructive behavior that you want to avoid if you're going to be successful in the market. And this is why you need to ensure that you use proper risk to reward ratio. This is the only way you can profit from the market. Now, these are the points where I'm supposed to probably take your questions. So if you have questions on any of the things I've discussed, or you have questions on certain systems, you can feel free to drop that in the chat box. However, I also want to highlight some solutions that we have here at GC Market, because at GC Market we are committed to your benefit. And so we know we have traders who don't know how to trade or are still learning, but they still want to be able to make profit from the market. So we have a copy trading solutions and a man management solution. So this is one where you can fund your account, and then you have your account linked up to a professional independent traders, so that when they take a trade on the account, your account automatically copies the trade, and you make money as they make money. So you're leveraging on their experience, their knowledge, and you're just piggybacking on them. For copy trading, the minimum deposit is $100. You need to get a VPS to be able to copy trade, and then there might be some fee attached to it. For MAM, the minimum deposit is $500, and it's a profit sharing system. So when the trader makes profit at the end of the month or so, he gets 30% and you keep 70%. So you're just leveraging. Now, if you're learning, at least this is a way to be making money even though you're learning, because your learning phase might, take some ups and downs, so that you can still be making money while you're doing this. So, and the economy is, the economy story. If you had saved a 1 million naira in the bank in January, just by keeping it in the bank till now, you probably lost about 300,000 out of it to inflation, because what a 1 million naira will get for you in January is, 1.6 or 7 is what it will get for us, or is what you will need to get the same thing now. But by investing, you have you can stand a better chance of making good returns for your money. So I'm going to check now to see if there are questions, and then I want to do that